Hi everybody and welcome to our special Made for YouTube series. And today I thought that we'd speak a little bit about passive investing because, there's no doubt that it is picking up pace and there is no doubt that a few years down the line, it could very well be the future, right? So let's just take a primer on what passive investing is and how do you go about it. So currently in India, passive industry is you can say 3.15 lakh crore rupee industry. 3.25 lakh crore फिलहाल passive में है. And if you compare it to the overall size of the mutual fund industry, it is just 1/10 because the mutual fund industry is 33 lakh crore rupee AUM. Now what is passive? Active, we all know active means that there is a fund manager. He's taking active decisions, research of that scheme. The team of that scheme may show that, okay, a particular set of stocks will do well. So they bet on those stocks. How much should you put in that? So those are all active decisions which are being taken. Passive, on the other hand, means that they choose an index which that particular passive scheme will follow and they just replicate the index. Right? So there are three main ways, there are three ways to do passive investing. The largest amongst them is ETF. Next you have the index funds and then there is the fund of funds, right? Now the objective of passive investing is not to beat the market over here being the index that you're tracking. The objective of passive investing is to be the market or to replicate the market, right? So accounting for tracking error. Now what is a tracking error? Perhaps in a later video we'll do it, but basically there may be a little bit of difference here and there because see, there is an index which moves according to the market. Your ETF or your index fund, etc., replicates that index, right? So at the end of the day, in the last half hour of trade, they will adjust the weightages of the underlying stocks according to what has happened in trade that day. And so therefore there is some margin of error, and also because the index itself does not have any expenses, but even an ETF, whether it has a 0.1 basis point or 0.5 basis points expense ratio, that has to be accounted for, and therefore there is just very, very minor difference between the index and your ETF, index fund, etc. Right? Now the largest category of this passive universe in India is the ETFs. ETF is what? It just means exchange traded fund. एक फंड है जो आप एक्सचेंज पे ट्रेड कर सकते हैं जैसे आप स्टॉक्स ट्रेड करते हैं, राइट? तो थ्रू आउट द ट्रेडिंग डे जब भी मार्केट ट्रेड कर रहा है उस दौरान आप ETF को खरीद सकते हैं, बेच सकते हैं, राइट? तो दैट इज एक्सचेंज ट्रेडेड फंड, ETF. नाउ जो हमने कहा था 3.25 लाख करोड़ की ये मार्केट है पैसिव्स की, उसमें से यू कैन से ऑलमोस्ट 3 लाख करोड़ 2.9 लाख करोड़ अप्रॉक्सीमेटली इज ETFs. Right, so it is a very, very big industry amongst the passives, and the main reason for it is एक तो liquidity बहुत ज़्यादा है because you can trade it at any point, right? The expense ratio of an ETF is lower than even the index fund, right? So in the whole passive universe, you'll find the lowest expenses in ETFs. So ease of transaction is there, there's transparency. So for a variety of reasons, people find that ETFs to be the investment vehicle of choice. And in passives, your biggest enemy is expenses, right? So if you're going to go the passive way, experts say that the best way to choose something is to choose a scheme which has the lowest expense. So these are things that go in the favor of an ETF. Now there, and you might be confused, because I was confused, is because every other day we are seeing a lot of NFOs coming, XYZ ETF, ABC ETF. So basically there, within ETFs, as of now, SEBI has not defined any particular category, right? But the most popular investment choice so far has been the index ETF, right? Now index ETF would be an ETF which trades an established index, like say a Nifty 50, Sensex, mid cap, small cap, any of those indices, you can have an index fund. Within index fund, the Nifty 50 index fund has the largest market share, right? Then comes the Sensex ETF and so on and so forth. So, bond index is the third largest category, if I remember right. So basically, that's one of the categories. So within ETFs, it's the index ETFs which rule the roost. Other than that, there can be so many kinds of ETFs. There can be sector ETF, bond ETF, there can be gold ETF, liquid ETF, thematic ETF. There is now this smart beta ETF. Now it's interesting because you would be wondering that gold ETF, I've sort of just brushed aside. Well, it's not that. It is an important ETF, and if you think back to before 2014, gold ETF was actually the most popular ETF around. But now we have seen a lot of other ETFs come to the fore. So index ETF, of course, now being the most popular. Amongst other things, one of the newer innovations in ETF is this whole smart beta ETF, right? So smart beta ETF is, we also call it factor investing, is basically nothing but tweaking the index according to a set of criteria or rules. It's also called rule-based investing. So basically you focus on any one aspect of that investment universe, you tweak the index to that, and you use that to offer a better risk adjusted reward, right? So let me give you an example. Now I said that smart beta is also called factor investing, right? So factor is, suppose there is a list of there's an index, right? Now there's a list of stocks. Now amongst them, I want to make a factor by way of value, by way of, say, style of investing, which can be value or growth, right? So I will choose to make that index on the basis of say value stocks or growth stocks. Likewise, I can choose to make this factor amongst other things, yield, dividend yield, momentum stocks. I can choose quality of companies, the size of companies. I can choose to have a smart beta ETF which is Nifty equal weight. So currently you might be knowing that Nifty has all the stocks in the Nifty are not weighted equally, right? So say something like an HDFC Bank or a Reliance would be 10-11% of the Nifty. There will be some smaller stocks which will be sometimes 1% of Nifty, right? You can have a smart beta ETF which says, whether it's a Reliance or it's the smallest weighted stock on the Nifty, I'm going to give them all equal weight, right? So basically it is a style of ETF investing, and it's a very new phenomena, right? It wouldn't have a track record of more than a few years. So it is very early to say whether it is very effective or not, but certainly there is a lot going for it in terms of that it can be tailor-made or optimized to offer better risk reward, and perhaps we'll need a few more years of data to ascertain whether or not it can really beat just a Nifty ETF. Right, amongst other things, you also have the very popular bond ETFs. You have the Bharat 22, CPSC, etc. So those are also passive strategies that have done very well. The disadvantage of an ETF, to my mind, is that just like the we have this tendency with stocks that I will trade if I can. So you can have that tendency with ETFs too, that just because the trading facility is available, you might tend to trade, but these are meant to be vehicles of longer term investment, and therefore they should be thought of as such. The next category is index fund. Now you remember we said that ETFs was almost a 2.9 lakh crore rupee category. Well, index funds is just about 17,000 crores. Okay, so you have actually some actively managed schemes which are way bigger than the entire category of index funds, but then that's the way it is. Even within index fund, you'll see that the top 10 index funds actually manage 83% of the market. So most of this, 17,000 crores that you have would be divided in just 10 index funds, right? Again, over here, it's a Nifty Sensex kind of funds which, do very, very well. But you can have international funds, again, smart beta figures over here as well. So it's just a different way. An index fund is nothing but it's like a mutual fund, right? So it will have a slightly higher expense ratio. The only other difference between ETFs and index funds is that to trade an ETF, you need to have a demat account. An index fund can be bought and sold without having access to a demat account. You can do it directly through the AMC or your broker. So it has whatever you can think is the advantage or disadvantage of having a mutual fund, that is exactly the same as that of an index fund. ETF, of course, being different because it is tradable on the exchange. Other than that, index fund also follows a passive strategy to the T, that it will not try to beat the market, it will just replicate the market. The third is fund of funds. Now, fund of funds by its name suggests that it is a fund which is made up of many different funds, right? So I can say choose to have say a Nifty fund of funds. So what will I do is I will go and I will take the top 3 or 4 or 5 Nifty funds and I will invest in them. So instead of investing directly in stocks, so instead of replicating an index, I will invest in the funds which follow the mandate that I have chosen, right? So whether it is, say, suppose if there is recently we saw this multi-asset fund of funds, right? So I will just choose 4 mutual funds, one for, say, diversified equity, one for gold, one for debt, one for international, and I will invest in those 4 schemes. So I, as a fund manager, have very little to do because I am relying on the expertise of those 4 fund managers who are managing each of those schemes individually, right? So that is a fund of funds, and naturally, compared to every other passive strategy, fund of funds is more expensive because you're investing in 3 or 4 or 5 other funds. So you have to bear in mind their expense ratios, etc. But nevertheless, a lot of people do prefer this because it's more diversified, right? So you don't have the risk of relying on the expertise of any one fund manager or any one fund manager who's managing, because you have spread it out amongst who you think are 4 or 5 best fund managers in that respect. But anyway, this is a small primer on passive investing, and I hope you liked it. If you have any more questions about passive investing, do write into us. I look forward to reading all of your comments, and rest assured we will be posting more videos on how to do passives and the role that passive investing plays in your portfolio in the coming days. For now, thanks very much for watching.